We're going to spend more time on charts. I want to do a lot of scrolling today. I want to look at chart. I want to talk about what we're looking for to get into stuff. So we've got a little time before they come in. Until people show up, it's not quite 9 o'clock yet. Miss Debbie, everything says down. The path is clear, the entry is perfect, and the money is made. Absolutely outstanding. What a great looking trade. Good morning, Joel. Gary, good bottom. Everything says up into a termination condition, right? But with that look, picture perfect, out at the right spot. I actually took the exact same trade because of the good bottom. Gary, great job on that one. And then Joel going full rock star on it as well. Everything says down from a great top. You take the perfect entrance, get those first profits, and then get out with divergence break even. Guys, outstanding trading this morning. True story, Joel, I took that one too. Oops, no problem. Guys, can you... nope, don't restart, Joel. Turns out that I'm muted. Sorry. Can you guys hear me now? I'm just rambling, right? Rambling. Sorry about that. Good morning, Jim. Good morning, Luciano. Joel, Debbie. Gosh, I'm sorry, guys. Whew. It was a late drive home from Dallas last night. Um, Miss Debbie, perfect. Termination gives the full reversal. Full reversal gives odds favorable. Clear path. Perfect entry. Money made. Absolutely beautiful. And then Gary, termination creates the reversal. Everything says up. You take the shot and you get out at the perfect spot. Great job. Made the decision to trade into that line because these lines held. And I think that was, Gary, that was the solid part of this. I actually took the exact same trade with the exact same entry and pretty much the exact same exit. And then Joel singing your praises too, man. When that termination turns everything, gives you odds favorable, you take the perfect entry, quick profits because it's not a high probability, and break even. And I like that you felt good. I love that you felt good on that trade, man. Nice job because it's a beautiful trade. I took the same one. Still can't get your sound. Can you guys hear me? Good morning, Sophia. Is it just Joel? Yeah, let's get Joel to reboot then. 5x5. Hey, what's up, Chris? Gino's back too. Nice to see you. Ron C. Yo, yo. How we doing today, everybody? You guys feeling good? I feel great. I feel awesome. Um, uh-oh, Sophia. That was from yesterday, the one that you posted? Let's see what Sophia did. Sophia said when a termination creates a reversal, gives me momentum, she'll take a momentum style all the way down. Sophia, beautiful. Absolutely beautiful. 100% per your plan. Guys are making me proud. Um, all right, so we're going to do this because you guys have given me an awesome something, and I'm going to show you. But first, let's do this, guys. Let's look at news because at 9:45, today is a mess on the Nasdaq. I noticed that. I made a couple bucks and then just haven't had anything since. Good morning, Chef. 9:45 a.m. today, guys. We have high impact news. No, David, it's not. You want to know what the reality is, David? Either your rules are met or they're not, right? Hey, Alan. No, it's not just you. It's just right now, David, you're trying to figure out your rules and you're wondering why there's not more trades. Some days pre-market is absolute rock star trading and it's easy, and some days it's just a mess because they're trying to figure things out. The better you are with your rules, the more in tune you are with your rules, the easier all trading is because you only give yourself two options, right? Either good ones, rules met or not. I like that, Gary. So Gary, you did my job. You went into the example trades and you went and looked. I love that. That's how we get better. Guys, every morning, forexfactory.com, I'm making sure that I'm not trading into stuff that may turn the market. Lava Lamp, that is a pretty cool name. I like that. Um, Today's Tuesday, October 24th, 9:45 a.m. There's Flash Manufacturing PMI, Flash Services PMI. I don't have any idea what that means, guys, but what I do know is that it's high impact and it means that it may move the market. It may make it jump, shake, reverse, spike, whatever you want to say. It might just be so darn fast that we can't do our chart reading right. So every morning I'm checking, I'm making a note, 9:45, right? Write it down on a piece of paper. Go, hey Siri, leave me a reminder at 9:40 that there's high impact news and I don't want to be in front of that. Each and every morning, guys, that's what I'm going through. And then everything that I'm talking about is from the tutorial section here in the education page. And when you click on it, guys, that's everything you need. I promise. There's no secrets. There's nothing there that you don't need. Good morning, Dwight. But guys, I want to talk about some stuff real quick. I'm totally changing up class today. I'm feeling crazy. So watch out. I want you to see something. There's been some stuff posted today, right? Miss Debbie posted a termination that creates a full reversal, sets her up for success. And I want you to see this one. A termination that creates a full reversal, sets Gary up for success. Termination creates a full reversal, sets Joel up for success. Termination creates a full reversal, sets up Safia for success. So guys, there is a very definite theme here. Is the market coming from a good top or bottom? Is the market coming from a termination from one of those lines that created a full reversal? And guys, that's kind of what we do. This is the RTY. I've never seen it, but John said there's tons of great examples on here, and I think that he's right. Um, we are looking for terminations to create full reversals. We're looking for these areas in the market that really create bounces that make things change. And I want you to see it right here. Guys, all we're talking about is lines. All we're talking about is lines on a chart. We're not talking about anything crazy or wacky. Basically, did this red line turn these green triggers red? And if it did, man, that's a termination. That's creating a good top. This blue line, look at the bounce. And everything ends up going up. These yellow one-to-ones, see how they push down? And those triggers never change. So what we're doing is we're looking for the opportunities after the areas that create a bounce. We're looking for our shots when one of these lines makes everything go the opposite direction, guys. We're looking for little pullbacks on our chart. Or when lines break and everything gets above, we're looking for little pullbacks to those lines. This is all we do. Looking for our opportunities in the middle. This blue line, everything goes up, and then those yellow one-to-ones break, and there's a pullback to them. Get in, get out, it pulls back to the blue lines, everything goes up. Before it hits that red line, guys, there's your opportunity. This is what we're going to do all day long. We're going to look for the opportunities in the market. We're going to look for terminations that create full reversals, and we're going to see what's available to us after it. I'm pretty excited about this. I don't know if you guys have watched it. Let me pull up my Skype real quick. Um, there are some days, usually the ones that end in Y, that my older brother is pretty darn smart. And he sent me this, and I want you guys to go watch this. This is just him doing exactly what I'm doing right now. This is one of the best private sessions John Novak's ever done for you guys, and it's just looking for opportunities. It's looking for trend trades. It's using the NASDAQ. It's going for all these opportunities. But what he's doing is he's looking for terminations that create a full reversal. He's looking for momentum, nothing in the way, and then pullbacks for entries. And that's exactly what we're seeing here. We're seeing terminations that create full reversals, and we're buying pullbacks. Or if you scroll back, we're looking for these lines that make the market turn, and then we're just looking for pullbacks to get us to the next area. And it's pretty cool because it becomes easy. Once you get a little bit of time in, once you get just a little bit of repetition in, and you know what you're looking for, it becomes easy. So we're going to do this. We're going to focus on this checklist, guys. We're going to do it through the high probability trend trade. And that's really what's going to set us off is this high probability trend trade. Three rules. That's it. Three rules coming together, two charts, making your world a wonderful place. So I'm going to remind you that we're going to use a large chart. It's a broad stroke of a brush. This is where we're going to look for those termination conditions. This is where we're going to look for those reversals. This is where we're going to define direction and momentum and areas. And it's a broad stroke of a brush, guys. Your large chart gives you the general consensus of what the market thinks. And then we're just going to focus on that small chart and get us into these trades. I'm trying to change it up today because I really think that sometimes you just got to say it different. And I'm excited because I did a lot of scrolling back and looking at stuff, guys. But it's the same thing, everything. What, Joel? Finally, what? What did I do? Large charts need to have strong triggers. Large chart needs nothing in the way. Your audio, I love it. I was like, man, what did I do? And then we're going to look for entries on the smaller, faster charts, guys. And everything that we do today is going to revolve around just looking for opportunities in the market, looking for terminations that create full reversals, and making sure that we're not trading into lines. And we're going to do it on the RTY. I've never seen it, but it seems to flow. We're going to do it on crude oil. Easy on Mark. And we're going to do it on the S&P. Hey guys, we're going to look for these opportunities, and you know what? Maybe I'll even bring up the NASDAQ too. Let's just do all sorts of market searches to see what we can find. But before we do it, let's talk about the rules real quick. Let's talk about strong triggers. What does it mean to have strong triggers? It's really pretty simple, guys, and I'm going to keep class consolidated so we can spend a lot of time in the market. In order to have strong triggers, guys, we're trading with the trend. But it's really pretty simple. Strong triggers means that on your large chart, there's a separation between the large and small triggers. Between those solid lines and those dashed lines, there's going to be space, like scissors opened up, ready to get some work done. Guys, this is a strong trigger look. This is a strong trigger look going to the downside. And when we have this, the odds are favorable for the market to continue up. And guys, this is when we're going to buy those pullbacks on a smaller chart, or we're going to sell those pullbacks on a smaller chart. They look like tails on the large chart, but they're actually retracements on a smaller, faster chart. Good morning, Derek. Welcome to the room. Nice to see you in here. Guys, I like it when new people show up. I want to remind you that this is your classroom. Please don't be shy. If you have any questions, comments, concerns, throw them in the room. We got you. Guys, we're going to look for an awful lot of momentum today. We're going to look for markets that are likely to continue in the direction of the trend. And we're going to try and stay away from these weak triggers if we can. Weak triggers mean that anything can happen up or down. And the visual look, guys, it's just that separation that we're looking for on the trigger look. We're making sure that every time we look at a chart and we're considering a trade, we have that gap between small and large. We have that gap between small and large because when this happens, there's an awful lot of momentum in the market. But then once you have it, you can't trade into those lines. And that's the easiest way to say it. If you reach a line, sit on your hands. If you break a line, look for a trade in the direction of the trend. Green is up, red is down. And we're going to do this all day long, guys. Into a line, sit on your hands. Break through those lines. Let's look for an opportunity, and then we're going to look for lines to reverse the market. Is everybody good with that? Am I simplifying too much? Here we're trading into lines. We're going to sit on our hands. We're going to see if the lines break or if they don't, just like we did here. The lines didn't break. So rule number one says that we have to have strong trigger lines. We have to have a market with the advantage of momentum, pushing in the direction of the trend. Smalls above the large are wide. Smalls below the large are wide. Here we go. Once we have that advantage of momentum, guys, we're going to talk about those lines. We're going to talk about those no termination conditions to be true. Don't trade into areas that are likely to stop the market. And if we go back to your set of rules here, it's just lines on a chart. It can be blue Fibonacci support or red Fibonacci resistance. It can be yellow one-to-ones, cyan divergence low lines, magenta divergence high lines. And guys, all of these can stop the market, but they can all act as an anchor for an amazing trend trade. And I want to talk about the recipe for termination conditions real quick, because If we're going to look for strong tops and bottoms from terminations that create a reversal, it's just a two-part process. If price reaches one of these lines and none of your triggers break through it, guys, it's a termination condition. It's not a clear path. It no longer offers you the advantage of a market that's likely to continue. Um, and if it does hold and it ultimately reverses the market, this is where your trades happen. Your trades happen after these lines holding and everything says up, or after an area breaks. Notice that when we get to support, everything breaks below and it pulls right back. Guys, we're looking for these spots. We're looking for these best of the best. And this is your good top. This is your good bottom. This is the precursor for the highest probability trend trade that you can take. This is the one that typically wins 70 to 80% of the time. And if you trade into the areas, it's not very advantageous, but if you trade from the areas, it creates a huge advantage. Trading into the areas, look at the indecision, and then when you trade after the areas, it creates an easier scenario. Um, Everything holds, the triggers roll, there's that momentum, and there's those tails, guys. We're going to learn how to capture these. So we're going to embrace the idea that the large chart leads the way. The large chart's going to give you strong trigger lines, guys. The large chart is going to define momentum. The large chart is going to define termination conditions. And there's really only two scenarios when you talk about termination conditions for brand new users. There is areas that are likely to hold. And areas that are likely to hold is when you reach a line and the triggers don't break. And that really is the simple recipe. No triggers through an area, sit on your hands, do nothing. Guys, when the trigger lines get to the other side of an area, this is where we're going to make our money. This is where we're going to take advantage. This is where you guys are going to be able to recognize that those key areas have broken and it's time to look for a trade. So if your small and large triggers smash through an area, the area is broken. Let's look for trades. If they reach an area and absolutely nothing goes through, sit on your hands and do nothing. And you're going to see these terminations everywhere. When you reach a divergence high line, price reaches that line and none of the triggers break. Guys, don't trade into it. Price reaches resistance and none of the triggers break. Don't trade into it. Price reaches yellow one-to-ones, none of the triggers break. Guys, these are all termination conditions. But the cool thing is not only do you know not to trade into it, but if it reverses the market, you know that it's setting you up for the absolute best of the best. And these are at a low. You'll also see them. I'm sorry, those are at highs. These are at lows. Price hits that yellow line, do nothing. But if this yellow line reverses the market, we're going to buy these tails all the way up, guys. Support, triggers don't break, do nothing. Divergence lows, triggers don't break, do nothing. We're going to do nothing until there's something to do, until the market reverses. So we're going to go through and we're going to identify. Price reaches resistance, none of the trigger lines break through. We're not going long into this area. And we're not going short yet because look, your large triggers are still up. So we're in a moment of indecision. But when everything is up and everything is facing the same direction, we're going to capture it. And I feel like I'm all over the place. Sometimes changing gears for me isn't always the best. That's okay. Large chart, strong triggers. Guys, give me a Y in the room if you're with me. I'm trying to keep this as basic as I can. It's really a simple separation between the small and the large. Guys, look for that momentum. I don't want to bore you guys with an hour's worth of rules today. I really want to be able to get into the market and look at stuff. And then termination condition. Guys, can we keep it simple? Can we say if price reaches one of those lines and nothing breaks, let's sit on our hands. And if price gets to the other side, let's look for opportunities. And then, guys, all we have to do is be able to capture the opportunity. When we have that momentum, when we're trading from one of those lines, when we're not trading directly into one, we're just going to refine it a little bit. We're going to grab a smaller, faster chart, and we're going to look for a pullback to areas inside of favorable large triggers. And we're going to do that pretty simple. Let me get to my favorite picture for identifying. And this is what we're going to do as much as I possibly can today. When my large chart says everything is up, when my large chart hasn't reached a line, Your small chart's going to look like this, guys. We're going to look for these pullback to areas inside of favorable large triggers. When the triggers get above the red line and it turns blue, we're going to look for our opportunity. We're going to use that area of support for an entry, guys. This tail on the large chart pulling back to support is this retracement on the small chart pulling back to support inside of these trigger lines. And that's what rule number 3 is. And we're going to do some bar by bars today. It's going to be a lot of fun. But rule number 3 is going to have you picking your entries with so much precision that you're going to use a limit order. You're going to wait for the market to come back to you. And when it comes back to you, it's going to do it in an area inside of favorable large triggers. This becomes the entry for the highest probability trend trade that you can take. This is going to be where you're going to enter the market and you're going to look for your advantages. And it just happens on this little pullback when everything says up on the large chart. When you haven't reached a line on the large chart, guys, if you see a reversal bar on your small chart, you're just going to look for areas inside of favorable large triggers. You're going to activate a limit order. You're going to enter at the areas, and you're going to take it up to that next problem area. And we're going to go find an example of that right now, and we're just going to do it. And let's do it like this. Let's take all the noise off, and let's embrace momentum because momentum is key. Everything says up. The trigger lines are strong. Let me get the drawing off of here. I want to show you guys how to enter, and then we're going to look for these entries. When everything says up on the large chart, guys, we're coming here. Watch this. I'll draw a fib in. We're coming from Fibonacci support. The market reverses. It gives us momentum. Small's above the large are wide. They're angled in the direction of the trend. And there's nothing in the way. We haven't reached the next area. Guys, this is what your small chart looks like. Everything says up. What happens in one bar on this large chart happens in 15 to 30 on the small chart. So your small chart is going up. Your small chart keeps going up. And Nexgen users are going to wait for a reversal bar. And at the time of that reversal bar, guys, we're just going to create a window of opportunity. We're going to look for areas of support that are falling inside of triggers. And this becomes the area where the market is most likely to continue. This becomes the place for the bounce. And I want you to see what happens here. The market comes down, and then it continues up. And it continues up right off of this area, right inside of favorable large triggers. Guys, this is your area to trade from. This is where your limit order goes. This is where we're entering the market. And with all that momentum, that market is likely to continue up. And this is what we're going to look for each and every day, guys. We're going to look for odds favorable momentum. We're going to look for the reversal. This one is exactly what we're looking for. I'm going to show you. I'm going to put that fib in there. Come on, charts. Here's one of those termination conditions, right? That line, none of the triggers break through. Now we have the reversal. The reversal sets up odds favorable momentum, those strong trigger lines. Everything says down, and we're going to look, and we'll see if it forms one of those tails on a smaller, faster chart. So strong triggers are going to always lead the way, guys. Strong triggers are going to set you up for success. Strong triggers are going to tell you that the market is likely to continue in the direction of the trend. Strong triggers is easily identified as smalls above the large or wide, angled in the direction of the trend, space between the two. In a downtrend, smalls below the large are wide and angled in the direction of the trend. Rule number 1, 100% defined. And then we're going to make sure that we're not trading into one of those lines, guys. You're going to make sure that price hasn't reached an area that may reverse the market. Divergence highs, divergence lows, red resistance, blue support, yellow one-to-ones. And then once we have that, we're going to capitalize by taking that pullback on the smaller, faster chart, guys. This is the three rules for the high probability trend trade. These are the three rules that happen on only two charts. These are the three rules that you can study each and every day. And they're going to set up over and over. Termination once again, and it creates that push down. But we've reached a blue line, so we're waiting just a minute. But here, the blue line creates the reversal, and it gives us odds favorable momentum, and the market pulls right back to support inside of favorable large triggers. Odds favorable momentum. Once again, this is crude oil. Everything says down. This is a great example. We're letting the blue lines break. Support begins to act as resistance. The market is pushing down. We're going to look for our opportunity on this pullback to the area. Let the area break. Look for the pullback to the area, guys. This is what we're going to do all day long. I'm excited about it. We'll have some fun with it. But we're going to go through everything. We're going to go through the rules real quick. T3 trigger lines define the trend, guys. When your smalls break above the large, it paints the background green. You're only looking for rules to be met for high probability trend trades long. When the smalls, you want to look at the ES? We'll look at the ES, absolutely. So let's take a look at it, Gino. Let's go through the process. What is it that we're looking for to get into a trade? We're looking for a good top or bottom. We're looking for the termination to create a full reversal. That's it right here. When this magenta line, price reaches it, no trigger lines break. Gino, this is 100% termination condition. And notice how the trigger lines roll. There's your full reversal. That's the first thing we're looking for. Next, we're looking for that odds favorable momentum. We're looking for those strong trigger lines. Small triggers below the large triggers. The large triggers are wide and angled in the direction of the trend. Are you with me so far, Gino? We have the termination that reversed. We have the odds favorable, but now we have to make sure that we haven't traded into one of those lines, that we're not reaching an area. There's a blue line, there's a magenta or a cyan line. Notice how the triggers haven't broken it yet, Gino. Your small triggers haven't gotten through 4260. Your large triggers haven't made it through most of these lines. The one thing that we don't have yet is a clear path. We have to wait. We have to wait for this market to either push below, get those trigger lines below, or see if this blue line holds. For newer traders, are there markets you suggest more than others? David, crude oil and the S&P flow nicely. They really do. Crude oil and the S&P flow nicely. They don't tend to overrun as much as the NASDAQ. My brother told me this morning, he introduced me to it this morning, RTY apparently flows really nice. Creates a lot of opportunities. I've never traded it. I'm going to start looking at it, but I've never traded it. Pretty good, Chris. I think everything. I think S&P flows better than crude after lunch. But guys, every market right now appears to be setting us up, but making us wait. Termination, full reversal, odds favorable. We need to get through this blue line. Gino, does that make sense? Termination, full reversal. Look at this. We go through the blue line and it pulls right back to the red line. But now we're into those yellow dots. We have to sit for just a second. This is your NASDAQ. Termination, full reversal. The triggers get below. And they're pulling back too. We'll see what happens. Termination, full reversal, and we're reaching lines. So it becomes a pretty simple concept, guys. The idea is that strong triggers lead the way, momentum leads the way, but not having anything in the way is where it's going to separate the novices from the experts. Not having anything in the way is the difference between hoping and having an advantage. And it's really pretty simple. If you reach the line and the triggers don't break, sit on your hands. I can't stress this enough. If you reach an area and your trigger lines haven't gotten through it, guys, you don't have a clear path. It's okay to do nothing. When your smalls and your large get through the area, price loves to pull back to it and use that area, resistance as support or support as resistance. And this becomes the key to what we do. Um, Having that clear path, making sure that the trigger lines get through. Termination, full reversal, odds favorable. Do you see how none of the trigger lines, guys, give me a why, because this is the patience piece for what we do. None of my trigger lines have made it through this area just yet, which means that this area isn't broken, which means that you don't have the advantage of a clear path, which means that we just have to be patient. But if we scroll back on the S&P, you're going to see instances where areas break. You're going to see instances where, look how it breaks above and pulls right back to get us to the next key area. Termination creates the reversal. The reversal pushes us up. Guys, we're going long right here on the pullback. Breaks the area, pulls back to it. We see this each and every day. And now it's just a waiting game. Is that market going to break this area, or is this area going to reverse it and push the market back up? That's the only thing we're not sure of. So we wait for that advantage of rule number 2. This termination keeps us from trading back into this line because none of the trigger lines break. Now the termination creates the reversal. Woo, there we go. Look at the momentum. Guys, do you see that? That was textbook. And now the triggers are breaking. And now 1693.6 is acting as support. Are they going to come back and tap off of it like they do? Termination, full reversal, get above the area, pull back to it. And I've never done this on the RTY, and I don't have any sort of targets in. But I'll be darned. That's what we're looking for, guys. And I'm going to close this one out. Let it break, pull back to it, and off we go to the races. And guys, this is a little outside of what we look for, but the idea is still the same. When you break areas and pull back to them, the triggers are above, they're likely to hold the market. They're likely to keep you on the right side of things. And then this one kind of turned against us, and that's okay. Still opportunities. I've never watched the RTY before, but that was textbook. Termination, did you see how the market reacted off of the termination? Did you see how quickly it went the other direction? See how easy it was to recognize? That's what we're doing each and every day, guys. Now we're waiting to see if these break. And I'll tell you what, my brother did this a lot smoother in his video. It's the Russell. It's the E-mini Russell, Ron. No worries. Chris, take care. You want me to go over your chart before you split, man? Guys, there it is, textbook, right? Triggers break the area. Chris has odds favorable momentum. And the market continues down right to the yellow dots. Ron, yeah, I don't know. It's kind of like the S&P, but just a different conglomerate. But apparently it flows really nicely. I haven't studied it yet. I'm going to start studying it. Chris, killed it, dude. Up top, look at that. Mid-band is a termination. Everything says down. You let it break. Little snap back to it, and down you go, man. That's everything that I've been talking about right now. Nice trade. Enjoy your afternoon. Guys, we can't go short into blue lines. Exactly. We can't go short into blue lines. And Chef says the S&P is a prime example of why you let those triggers break. It was, Dwight, very much. Look at that. No triggers through the blue line. Chef, did you go short? You better not. You're just watching, right? And now that blue line's holding. And guys, we're caught in a little bit of a range. We're caught in between the best of the best. We have a termination that's creating a reversal, and then we have a termination that's creating a reversal. The only thing that we're waiting for is a clear path. We're waiting for trigger lines to get above the area. Does that make sense, everybody? That was the fastest run through for trend trade rules ever. Termination, full reversal. We just want to get those triggers above so that resistance behaves as support, so that we can buy a pullback to that key area right inside of favorable large triggers. The smalls are through. The momentum is there. There's my triggers. Just waiting for the break. Derek, Anita, welcome to the room. Everything that we talk about in this room revolves around advantages. When one of these lines reverses the market, when the trigger lines start breaking through, we're going to wait for a pullback right to that key Fibonacci area. And that key Fibonacci area is going to line up in a perfect world with these trigger lines. And we can literally call our shots, guys. The key is that we have to study this a little bit. You have to go through and you have to get yourself in a position to where it starts to get easy, to where you can catch these in the moment. And I wanted to do some live market examples first before we really get into the rules. But I'm going to remind you guys, especially my newer people, Derek, Anita, Gino, you know this one. Gino, let's work on posting pictures today, right? Guys, posting pictures in the room is the key to getting to where you want to be, because you and I are going to have a conversation about everything that you see. We're going to talk about momentum. We're going to talk about that clear path. We're going to identify termination conditions. And together, you and I are going to kind of hold hands and look at what you're doing well, what you can do a little bit better. And we're going to work together to get you exactly where you want to be. And then we've also given you a spreadsheet, guys. This is a spreadsheet where you're going to track your performance. I'm just going to give you a copy of mine right now. It'll make it easier than you having to search. Dropping it in the room. Guys, this spreadsheet, whoops, is your trade journal. The spreadsheet is where you are going to record everything that you do, where you're going to talk about the trades you took, how you felt, what you were looking for. Any notes that you got from the feedback you're going to put in there. And every day you're going to be able to go back and look at this. Every day you're going to be able to study these trades to try and get a little bit better. What worked? What didn't work? What kept you relaxed? And the idea is that you recognize the patterns in the market that are bringing you success, but you also recognize the patterns in yourself that maybe are hindering that success. And that's kind of the magic of what we do here, guys, is we talk heavily about advantages. We talk heavily about disadvantages, and we get you focused on being able to recognize three simple conditions. Termination, reversing the market, making sure that you have the absolute best momentum, and then just identifying where that market is likely to pull back to in order for you to find your trade, to get the absolute best of the best trade. It's only those three simple rules. Look at this. As we get closer to that area of Fibonacci resistance, sometimes we just don't get our pullback, and that's cool. Just happens. So guys, I want you to start posting pictures today. If you're brand new, I want you to post in the room. I want you to take a picture of your chart, and I want you to show it to me. I want you to tell me, what do you see? We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. We're going to just reinforce all day long the concepts that we're looking for, the recipe for a trade. I'd like you guys to simulate a lot. I want you to get in there and I want you to pull the trigger and I want you to practice, practice, practice. And I want you to write on your charts like you're getting paid to do it. I want you to tell me what you see. I want you to tell me what it looks like. How did you feel? We're going to simplify today. We're going to focus on a high probability trend trade mostly, and that's going to be a trade that typically wins 70 to 80% of the time. That's a trade where every chart has every advantage. This is a trade that only has three rules: those strong triggers, not trading into lines, and then using that smaller chart for entry. And that's the trade that only happens on two charts, keeping it simple, keeping it focused. And then once you understand the basic concept of the high probability trend trade, it opens up doors for you. You begin to recognize areas likely to hold, likely to stop the market, areas that are broken, and you'll begin to look for opportunities beyond this high probability trend trade. But we're going to focus on simple first, guys, and your job is just to learn the trades or learn the looks so they become easy. Repetition creates recognition. And that's where the spreadsheet that I just dropped in the room has a lot of advantages, guys. There are about 270 pictures of entries, 270 pictures of using strong triggers, of not trading in determination conditions, 270 pictures of next-gen users using the software. There's ideas on NASDAQ, there's ideas on management, there's patterns that repeat themselves over and over in the market, and then a whole section on termination conditions, areas likely to stop the market. And then, Chef, that was everything, wasn't it? Odds favorable, clear path, pull back to an area inside a favorable large trigger. That's a good look. And guys, check this out. If I circle the tail, that's your three rules, 100%. So if you missed it, you have to ask yourself, why did I miss it? What made you not take it? Chef said we're too close to news. He didn't want to do it. But next gen rules, that high probability trend trade, there's your termination that created a full reversal. There's your odds favorable momentum. That's rule number one, strong trigger lines. So you guys that are brand new, you just watched it happen live. We hadn't reached the red line, but we cleared the previous, which means that there's nothing in the way, guys. And then there was a pullback directly to support inside of favorable large triggers. And if you got in at 42.70, you already made your $100 on the first contract. You may be break even, or you may be getting out because three divergences might push the market lower. So I'm going to run through each concept quickly, but each rule to make sure that you guys are comfortable. Terminations that create full reversals. Guys, this is what we look for. When you're trading from a line, it creates an advantage. And what that means is that you have an area that has reversed the market. It means that you have, where's my picture? Here we go. It means that one of these lines created a bounce and changed the direction. One of these areas, no triggers went through, created a bounce and changed direction. Guys, if you always look for your trades to happen after these key pivots, it increases the likelihood of success. So I'm going to give you this one. This is rule number one. Termination that creates a full reversal. Rule number two says that you absolutely positively must have strong trigger lines. And what I'm going to do is I'm going to put pictures of each in the room, one after another. Strong trigger lines are easy to recognize. Separation between the small and large, when both are wide and angled in the direction of the trend, guys, this is what pushes that market in the direction. In a downtrend, it looks like this. In an uptrend, it looks like this. It's like scissors open, ready to cut. And then when you have this strong trigger look, it's the most favorable look for buying pullbacks to Fibonacci support in an uptrend or selling Fibonacci resistance in a downtrend. And guys, these tails are those retracements on the smaller, faster chart, getting you to the best of the best entry. So first we're looking for terminations, and that termination has to give me those strongest trigger lines in the direction. And then once we have those strong trigger lines, we're making sure that we have a clear path. And it's pretty simple as well. If price reaches an area, sit on your hands and do nothing if the triggers are below. If both of your triggers break through the area, resistance acts as support. Let's giddy up to the upside, guys. Termination conditions, getting that clear path, it gives you room to the next target. All of this happens on the large chart. Everything that you've seen so far happens on the large chart. And then once you have these advantages, the advantage of momentum, the advantage of a clear path, the advantage, whoops, I just closed that out. No, I didn't. Then we're going to find our entry, and I want to talk about the entries, and we're going to break it down bar by bar. When everything on the large chart says up, when everything on the large chart says that the path is clear, this is going to be the look on your small chart, and this is where you have to refine that broad stroke of a brush. This is where you have to take the information from the large chart and translate it to a refinement on the small chart, guys. And this is the one that's going to take just a little bit of practice and a little bit of trust. Everything says up. The market's pushing up. There's nothing in the way. The momentum is the strongest. We're coming from a termination condition. And guys, you're going to wait for a reversal bar on that smaller, faster chart. You are going to literally hope that the market goes down in that uptrend. You're going to hope that the market pulls back. And when this reversal bar happens, Next-gen users create what we call a window of opportunity because rule number 3 says that we are going to buy or sell a pullback at an area inside of favorable large triggers. And favorable large triggers means on your smaller, faster chart that the large and the synthetic are wide, they're angled in the direction of the trend. And this is our best look. This is our highest advantage for recognizing where the market is likely to continue. And when we have these favorable large triggers, you're going to identify the areas that fall within. We're going to look for those same areas on a large chart that can stop the market, but on the small chart, create a bounce to keep us moving in the direction of the trade. We're going to look for Fibonacci support or resistance. We're going to look for yellow 1-to-1s or one of those green mid bands, and they need to be inside of those favorable large triggers. So when the reversal bar prints, we're looking for mid band support, yellow 1-to-1s. We want them inside of those favorable large triggers. And next-gen users are going to activate a limit order right at the top of that window. And I'm going to take this picture and go through the process for you. Large chart says odds favorable momentum. Large chart says there's nothing in the way. Small chart gives you a reversal bar. And at the time of that reversal bar, I want you to identify your favorable large triggers. Large and synthetic, one on top of the other. When you do that, we're going to create the window of opportunity, the area where the market is most likely to bounce. And that will extend from your highest point of support to your lowest point of support inside of favorable large triggers. This becomes the area where the market is most likely to continue. This is where next-gen users will right-click on their chart and activate a limit order. And you will literally wait for the market to come back to you. And if it does, you are in a trade, but you're in a trade with the advantage of momentum, with the advantage of a clear path, and now you're into that market where it's most likely to continue. Guys, this is the breaking resistance, pulling back to it as support. This is where we enter the market. We can manage our risk because if we know where the market's likely to continue, we know exactly where it shouldn't go, and that's where a protective stop goes. Outside of that window of opportunity, at that point where the market doesn't go. And I'm telling you right now that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. It's okay, guys. It's a cost of doing business. And then once you get that pullback and you're in, when the market, if the market goes in the direction of your trade, you can literally reduce your risk below a reversal bar in the direction of the trade. If you're a little skittish about pulling back and buying as the market's going down, you can wait for the reversal bar and enter on the reversal bar to take you to that next area. And guys, this becomes the highest probability trend trade you can take. This becomes the trade that typically wins 70 to 80% of the time. This becomes the trade that you're going to be able to recognize in the moment. There's your pullback to support inside of favorable large triggers. That's the one that you're working on for the first 20 days, guys. Um, Once you are able to take these trades, then you're going to be able to manage these trades. This particular one had a phenomenon that we see very often. These cyan lines are divergence. And these are the only time that we can recognize really that the market's going to change without seeing it hit a line on the large chart. And three divergences in the same price range may terminate a trend. When you get three losses of momentum, three cyan lines, three magenta lines, this is a phenomenon on a smaller, faster chart that can stop things in its tracks. This is the only termination condition that I'm looking for on a smaller, faster chart. But when you see it, it lets you know that the market may no longer push down. And these three divergences in the same price range become more powerful when the small triggers are inside of the large triggers. And we get those weakened large triggers, that absence of momentum. And it becomes more powerful still when when the third pivot from a low is higher than the previous, or the third pivot from a high is lower than the previous, that head and shoulders pattern. And if you look at this termination right here, these three divergences, it lets you know that it's time to maybe exit a trade. Wow, that's some big font, Gino. Divergences show you the potential for a reversal. How did you do that? That's awesome. I love that. So 1, 2, 3 in the same spot, Gino. I don't know. That's pretty cool, though. That's super easy to read. Three divergences from a low may indicate a reversal. Three divergences from a high may indicate a reversal. And you'll see those, Gino, when your large chart really hasn't hit a line. And we just saw it on the S&P, right? We didn't hit that line. We had all the momentum, everything set up, and then our small chart gave us three divergences. Not only did it give us the weakened triggers, it also gave us the third lower. And look at how the market reacts. Look at how it pushed down. What an amazing safeguard. And the other side of that is if you took the long, when this third divergence printed, you knew that it was time to exit that trade. You knew that you didn't have to sit and hope. You were able to get out maybe with small profits and then just wait to see what the market would do. And guys, I'm telling you right now, these key Fibonacci areas are absolute gold. All the triggers break it, pulls back right to it, right? But we're into this blue one. We just have to sit on our hands. So we're going to try and keep it simple for you guys. We're going to try and keep it focused. Let everything begin with a termination as a brand new user. This checklist is designed to get you into the market, to only give you the entry, the best of the best entry. And it's a simple checklist that you can police yourself. You can look for these three advantages that create a trade. You can look for these three rules to be met. Print this out, put it on your desktop. Check yourself every time you get it. If you are looking at the market and you're not sure if you have odds favorable momentum, if you're not sure if you've reached a termination condition, take a picture and drop it in the room. We'll talk about it. But this checklist is designed to help you police yourself, to get you focused on the absolute best entry. I'm giving you another example of the checklist, but this one has pictures pulled from the resource material if you're visual. This termination, when it creates the full reversal, creates the advantage, guys. This is your best momentum that gives you the advantage of a market that's likely to continue in the direction of the trend. It also reminds you what the disadvantage looks like. What it looks like when an area breaks or when an area hasn't broken. And then, guys, that recipe for finding that pullback, for getting in at the best of the best. This is your first 20 days, finding these entries, making sure that you can get into the market at the best spot. Because when you do, great entries create manageable trades. There was a little pullback with everything saying down. Sometimes we overrun a little bit. And guys, there it goes with all that momentum, right? The momentum is pushing down. Price is following. It pulled right back to resistance inside of favorable large triggers. This is a pattern that happens every day. There's your termination condition, but we haven't gotten that trigger roll yet. So we're sitting on our hands and we're waiting for that momentum to become advantageous, coming off of that termination condition. NASDAQ, also, there's that termination that creates the full reversal. There's that odds favorable momentum. Look how it breaks and pulls back. And we're just looking for opportunities. Look at how all the trigger lines break support. Guys, that's your sell in the NASDAQ. There's the line. Triggers don't get above it. There's the reversal. There's the momentum. Support breaks, pulls back to act as resistance, and it takes you right to that next fib, guys. And that is a 18-point move, $360 move down to support. Guys, what I want you to do is get in the habit of going back and looking for these advantages, looking for the clear path, looking for the momentum. There's three divergences on a large chart. There's odds favorable on the large chart. Everything says up. Let's see if we get a pullback. We may. Are there any questions about the high probability trend trade? I did that totally different than I usually do it. I'm trying to change it up and I'm trying to get these real world examples for you guys because I want you to be able to see it on the chart, on the most current bar. Everyone, give me a Y if you see odds favorable momentum. Small's above the large are wide, they're angled in the direction of the trend. That's rule number one. Rule number two is making sure that we're not trading into an area. We didn't reach Fibonacci resistance. We didn't reach yellow one-to-ones. And then finally, we're just going to look for pullbacks to areas inside of favorable large triggers to get us to that next level. And it's rinse and repeat, guys. And we're going to go through and we're going to look at pictures that you guys have posted. We're going to keep looking at examples here. If I've confused anybody, let me know. When I change gears, sometimes I change gears a little erratic, but it's fun. A different look, a different way to hear it. And now I'm going to give you, before we take the first break, guys, I'm going to give you what's called the KISS plan. It's the KISS trading plan. Awesome. Thanks, David. I don't ever want to confuse new people, but I also don't want to bore new people. As you wait to learn these rules, I want to make sure that you can see it happening live. I want to make sure that you recognize that it does happen live, that it is something that's repeatable. I'm going to give you a plan as well. I'm going to give you guys something that keeps you focused on the absolute best of the best as you learn to read your software. And this is a stepping stone in your learning journey, but it optimizes your chances on that high probability trend trade. And also that a 50-50 trade, which is a medium probability trade, which is a trade where areas have the potential to break. And a 50-50 trade just means that your trigger lines haven't cleared the area yet. It means that the small triggers have cleared the area, but the large triggers remain below. And a 50-50 trade looks like this. 50-50 trade is using that odds favorable momentum coming into Fibonacci areas and knowing that it has the potential to break because of it. And it becomes very powerful after a termination condition that creates that reversal. Has nothing to do with your chance of success. It just means that your trigger lines haven't broken. 50% are through and 50% are not. Not a clear path yet. Guys, it's going to be your simulation. It's going to be your study, getting class feedback, making sure that you're posting in the room and asking for help, and just practicing over and over until the looks become easy. You're going to create a plan that fits your needs. You're going to create a plan that makes sense to you. You're going to create a plan that embraces what is easy for you to recognize. But until you get to that point, until you can read your indicators at that level, this will give you a simple plan for consistency. This is a plan that typically, if the people in the room are to be believed, gets you in that 70 to 80% win percentage. And it starts with never fighting the large chart direction or trigger lines, always trading with the trend, always trading with momentum, making sure that you have those advantages first and foremost. And then you're going to take about 2 weeks, guys, and you're just going to define your entries. Those strong tops or bottoms, those terminations that reverse, momentum, nothing in the way, and then pulling back to those areas inside of the triggers. Guys, this is your entry for the high probability trend trade because once you can take this entry, everything else seems to just kind of work itself out. Great entries create manageable trades. But as you're learning to read your indicators, as you're learning to manage your trades, this plan also includes a very mechanical approach to management that keeps you focused on creating confidence through the memory of success. And this management plan revolves around your ability to get into the right spot, your ability to get into the market where it's most likely to continue, those areas inside of favorable large triggers. And it has you placing your protective stop outside of that window where the market shouldn't go. We manage risk long before we ever manage profit. We manage risk by having momentum, and we manage risk by not trading into lines, and we manage risk by entering where the market is likely to bounce. And we manage risk with protective stops where that market shouldn't go. And we accept that small losses are a normal part of a positive equity curve. But when you take these great entries, there's two options. Either you take that little loss or that market's going to move in the direction of the trade. It's going to move in the direction of the trend, of the momentum, of the clear path. And if it gives you that reversal bar, next-gen users are going to reduce their risk even further. You're going to get a tick or two above that one in a short. If it's a long trade, you'll go just below it. But what you've done is you've reduced your risk significantly. And now you're just waiting. It's either going to hit your first target or it's not. And the idea is that that first target's pretty close, embracing the momentum and the clear path, and it's only at $100. And if you reach that first target at $100, what you're going to find is that your palms stop sweating and the butterflies go away and you're happy and elated and you've got this confidence that's coming from that successful trade. $100 in your pocket, you're going to move your stop to break even, absolutely nothing to lose on the trade. As you learn to read your indicators, as you learn to trust the large chart, you probably won't move your stop that quick, but this is a great safeguard for new users because it makes it easier for you to stay into that trade. It makes it easier for you to hold for that second target, to embrace the idea that momentum does in fact lead the way, that that clear path is imperative to getting to where you want to be. And that second contract is only at $200, guys. And with all of that momentum and a clear path, this is going to be your result, typically 70 to 80% of the time when you're following the checklist. Second target hit, $300 in the bank. And here's the part that I think is pretty amazing. I've had people tell me, well, my goal is $1,000 a day, right? At $300 a day, if you can just pull that off every day, guys, that's a $1,500 week and that's a $6,000 month. And that carries you to a $72,000 year. And all of that comes to be from just looking for that one trade, looking for that odds favorable momentum coming from a termination, looking for that pullback to support inside of favorable large triggers, and giving yourself the opportunity to take profits at that next key Fibonacci area. This is the gentleman that wrote the software that you'll be trading. This is the gentleman that wrote the plan that you'll be trading. And I want you to see how effortless he makes it look. Termination, full reversal, everything's up with momentum and it pulls back. He finds his entry right at an area of support inside of favorable large triggers. And you can see that he has his target all the way up here at the next key area. Guys, that's your plan. That was just given to you by the CEO, the exact thing. If you follow this simple plan, this KISS plan, give it 100 days, or 100 days, sorry. Give it 30 days to create recognition. Give it 30 days of simulation. Give it 30 days to put yourself in a position to understand the advantages, to be able to get into the market and to learn to calm down a little bit and trust that large chart. Guys, this is going to create huge dividends and it's really going to turn you into a chart reader. Sure enough, it did pull back, didn't it? Right to support inside of favorable large triggers. So guys, once again, the market putting on an absolute clinic. Odds favorable, triggers get above, pulls back to support inside of favorable large triggers, and the market continues in the direction because of the momentum. Three divergences push it a little lower, and now it's turning and heading that way. Paul, I haven't had any. Termination creates a full reversal. Full reversal is giving me odds favorable momentum. And then once again, guys, I can't make this stuff up. There's your entry on the pullback to resistance inside of favorable large triggers. And great googly moogly, it is screaming to the downside. Give me a Y. We just saw two examples live. There's another one. That's the one John Novak just took. Guys, it can be done. This is what we do every day, every market. And John is going to show me exactly what we just circled in this room. No, that's okay, John. That was the right room. Because the circle that we just made from the termination that creates the full reversal is the exact entry that you just showed us right here. And there it is screaming down. So guys, that's our first hour. We talk about the rules, we talk about the advantages, we talk about getting into the market at the right spot. And then from there, just need you to rinse and repeat. Just need you to practice until it becomes easy. So I'm going to take 5 minutes. If you guys have a question, please post it in the room. If you have a picture, please post it in the room. Otherwise, we're just going to keep watching markets. We're going to keep waiting for the rules to be met. And when they're met, going to pull the trigger, guys. So I'll be back in about 5 minutes, and we will continue the day. Second hour revolves around feedback. Second hour is all about taking a look at what you guys have done, um, and just seeing what we can do to help. So I'm going to go to the beginning of the day. We're going to start looking some pictures that you guys have posted, and we are going to see what's going on. So Miss Debbie got us going today. We're going to take a look. And then once again, and this was kind of the way we started the room, guys, this is a termination that creates a full reversal that gives odds favorable momentum. Notice the strength in the trigger lines. Notice that they broke support. It begins to act as resistance. And her entry is picture perfect right there on that pullback. And that's exactly what we're looking for each and every day. We're looking for those key areas to reverse the market. We're looking for it to create the advantageous momentum, get clear of any trouble, and then just buy or sell a pullback. Gary does the exact same thing this morning. There's that termination, and it creates the reversal, and then he buys the pullback, and he exits at trouble. Joel, same thing. There's that termination, creates the reversal, gives odds favorable momentum, and he sells the pullback. Guys, this is something that happens every day. This is something that repeats itself. Every market, every time frame. It's just a matter of beginning to learn, to understand through chart reading how to find these advantages. Once again, termination creates the reversal, gives the momentum. Safia lets the area break, sells a pullback, takes it all the way down to the next key areas. Absolutely beautiful chart reading. Great trading. It's just a matter of practicing a little bit. Everything says down, area breaks, sells the pullback to it, and the market's continuing down over and over. Nice, Miss Debbie. Are you guys seeing the theme here? Area breaks, triggers are strong, pull back to the area, and then Safia, you took one into the areas again, and then you exited that last one, Safia, right at your entry for the high probability trend trade. But momentum wins, guys. Momentum wins. All of these trades are so great, there's just not a lot of feedback on them. You guys are absolutely killing it. All right, Gino, let's see what you did. All right, Gino, so let's take a look. Are you with me? It does. And you know what's true, Gino, is it gets easier. I always tell people, it's like it's so easy for me. I'm looking at pictures that are still, right? I'm looking at pictures that don't have any sort of, I've got no emotion. So I kind of like it because it's fun to go through and look at y'all still pictures, and let's put the rules on it. And Gino, this is why I'm such a big fan of annotating your charts, not just where you got long and stopped out, but let's go through the run. Let's see what we have going on here. And the first one is, do we have a termination that creates a full reversal? Do we have a strong top or bottom? So Gino, what do you think? Not coming from any lines, right? Kind of coming from the middle of nowhere. So there's my first no. You absolutely nailed it on momentum. Smalls above the large are wide. They're absolutely beautiful. That's a yes all day long. And then when we talk about termination conditions, do you see how these yellow one-to-ones, the triggers aren't really through? This is the one that I really want you to see on this one. Because not only do these lines create amazing opportunities when the market trades from them, but when we trade into them and the lines and the triggers don't break, man, that's our little red flag to be patient. And I think that's what we had going on right here. Small hadn't quite gotten through, which means that it's an area that may stop the market. And this is one of the biggest challenges for new users. We're all really good at identifying momentum, and we actually get pretty good at recognizing when we're coming from a line. But when we trade into lines, we get so excited about momentum and trend. And especially, and I want to sing a lot of praises here, is your entry was right at support inside of favorable large triggers. So, Gino, you had two-thirds of the recipe. But on this particular trade, that termination condition got you. Um, and that's it. That was the only challenge with this trade. Other than that, it's a lot of amazing chart reads. You're trading with the trend, you're trading with momentum, and you nailed your entry. You really did. You just had to contend with the termination condition. Does that make sense, Gino? I think it is 70% of the way to a fantastic look. Yeah, but that line just stopped it. That line on the chart took away that advantage. And you see it so often. You see these termination conditions hold so often. You eventually learn to trust them. And Gino, full disclosure, termination conditions were my biggest challenge when I was brand new with the software. I could identify the momentum, I could identify the trend, and entry spots were really pretty easy for me. But man, I traded into areas likely to hold. And then there's John's trade again. Odds favorable coming from a termination. Beautiful pullback, and that becomes an easy trade. The magenta line, that's the mid band, Gino. No worries. So let's go through it. Let's do the whole run. Um, there's nothing more important to me in this room than getting my new guys where they need to be. So let's go through the whole map of what we're looking at here. The divergence high lines, and these are all the lines that can stop the market. But these divergence high lines, these are the parallel or the horizontal um, magenta lines. So where these come from, divergence is a loss of momentum. Divergence is an indication that the momentum of the market isn't following the actual price action. So when the market, I'm going to take a picture of the picture. So for example here, where the market is trending down and then it heads back up, and this pivot is formed, what's going on in the background? Or same thing here, the market's going up and the pivot is formed. What's happening in the background is a comparison using MACD BBs about where the momentum is in comparison to the price. So anytime this cyan line prints from a low, it means that momentum didn't follow price. Anytime this magenta line prints from a high, it means that momentum didn't follow price. I'm not exactly sure what an oscillator is. Um, I can't answer that one. I bet somebody that's been trading other scenarios could help. All it means is that if I see this cyan line or this magenta line, I know for a fact that the momentum is dying. And that's the easiest way to look at it. And a lot of times it corresponds with the trigger lines as well. And these divergence lines become lines in the sand. And I've got a picture that I love to share. We're talking about these divergence highs and lows. It's literally the point in the market where the in control force lost control, where sellers stole momentum from the buyers, where buyers stole momentum from the sellers. And these divergence lines, really, they act like a line in the sand. It's almost like a taunt. I dare you to come back to this line because if you do, the potential is there for me to stop you and reverse the market on a dime, and that's why we recognize them as termination conditions. These yellow one-to-ones, these are fibs that print real time. Um, oh, okay. Thanks, Dwight. These yellow one-to-ones, these are literally in the moment. Your software goes through And as the market is trading live, I'm going to go to the glossary of common terms. As the market is trading live, these yellow one-to-ones print when the formula for that 100% fib alternate is true. So when they get this A to B pivot, and you don't have to do this, the software does it for you, and then it does B and it creates the low C, and all of this is outside of my pay grade for sure. But what I do know is that when these yellow one-to-ones begin to print, they become very key areas. They become one of those areas that we trade to, or one of those key areas that we respect if price reaches it and the triggers don't break. This is the one that got you, Gino. Um, and then Fibonacci resistance, Fibonacci support. These are also areas that may reverse the market. These are areas that can create a bounce. These are really where decisions are being made, is the best way to put it, I think. This is where buyers may be taking profits and sellers may be entering positions, or vice versa. This is where sellers may take profits or buyers may enter positions. And we have the advantage of seeing these. And these Fibonacci areas come to be when you open your software. And this is why they're not those in the moment. These are established over about 10 days of your software going back, measuring every swing in the market, projections, alternates, creating thousands of calculations, and then the algorithm sorts them and weighs them. So from all of these lines that are all of the calculations from every pivot in the market, your software creates these areas of support and resistance. It actually lets you know where low and high is. And then what you'll see running through the middle of your screen, Gino, is this mid band. And it's just a moving average. When price is below the mid band, it'll be magenta and it'll act as resistance. When price is moving above the mid band, it'll be green, it'll act as support. And this mid band can act as a termination condition. The mid band can actually stop the market, but there's one little, excuse me, there's one thing that we look for to determine whether or not it's going to have the potential to stop the market. And we'll use the relationship of the trigger lines when price reaches it. So if you reach a mid band on your large chart and your large triggers don't follow, if they stay a full bar away, then we give that moving average the exact same credit that we would give fibs or one-to-ones or a divergence line. It becomes a termination. And you see it, price reaches the mid band here and the large triggers stay a full bar away. It loves to close that gap back to it. You see it here as well. As it comes down, it snaps back and reaches those triggers. Let's see if we have another example. Price comes up to resistance in the mid band. The large triggers don't follow. It tends to pull back to it, and this mid band is behaving as a termination condition in the moment. And then rule number 2, not trading into lines, keeps you out of consolidation as well. From resistance to support to resistance to support to resistance, it gives you the opportunity to sit on your hands, to wait for the advantage, to let these areas break rather than trade right into them. So that's your roadmap, Gino. What you're looking at, how they come to be. And all of these areas on the large chart, we're just going to use to make sure that we're not trading into areas that are likely to stop the market. And we're also going to use it to give us the ability to recognize when that termination is reversing the market, setting us up for the highest probability trend trade that we can take. And look how it goes to the tick, guys. This is the NASDAQ. If you're not amazed by fibs just yet, you should be with just a little bit of scrolling. From support to resistance, from fib to fib, from resistance to support, from fib to fib. And guys, look at how when support breaks, it pulls back, pulls right back, over and over, guys. From support to resistance, there's one of those pullbacks to get you into the market. From resistance to support, there's one of those pullbacks to get you into the market. Support to resistance, holy smokes, it just keeps happening. There's one of those pullbacks to get you into the market. Support to resistance, there's a pullback, it breaks, pulls back to it. finishes to the next fib with resistance. Are you guys seeing the pattern here? All you have to do is study this. Resistance, everything breaks, pulls back, goes to support. This is the same methodology that we've been teaching forever. And then Gino, there's that mid band with the large triggers a full bar away. So we know that the mid band is acting as a termination condition and we're not taking a short trade directly into it. And thank goodness we didn't, because it closes the gap right to those large triggers. And now we're in a holding pattern. We're waiting to see if the market's going to go up or down. And then Ron takes a little different approach. That is a different approach, Ron. Experimenting on a 50-50 with divergence tends to lead to a reversal to the white bar, work in progress. All right. Ron, I think the biggest challenge with this one is it's maybe not a 50-50. That's a clear path coming from a termination. There's just no 50-50 there. The divergence pushes you to the bottom of the window, and then that third divergence kills it. Does that make sense? Just as you're doing study, I think that your highest probability opportunity as you look for these, Ron, of course, I don't think you want to wait this long, but your highest probability comes from that little snapback to the small triggers. That's going to create the highest chance of success with the least amount of risk. And no, it gets back below those one-to-ones. I like it. Keep studying. I think it's pretty cool, guys. This is how plans come to be. John Novak spent like 7 hours this weekend studying one rule, going back, market replay, looking at things to get to where he wanted to be. GWC Trader, nice to see you in the room again. Everything, trading the range, right? But using that little bit of momentum to get up to the next key area. GWC, that's solid. It's definitely not high probability trend trade, but that is amazing use of that quick momentum and knowing exactly where you need to take that off. Looking for the new heartburn trade. I love it. That's how you do stuff, right? Luciano, everything says down and it pulls right back to resistance. That's where you get in and you take it all the way down. You guys see it? Area breaks, pulls back to it. Luciano capitalizes, takes it down to the next area. I can't make this stuff up, guys. It happens every day. Termination, full reversal. Lutz, who is this? Dano says, I'm just going to take a little momentum here. Everything says up, Dan. You take it and you get out at the fib because the momentum says we're going to the fib. So Derek, I know this is a lot to take in on day one. How are you doing? Who else is in here? Freddie, how are you doing as you move forward a little bit? Manpreet, you doing all right? Alibola. I haven't seen your name in the room in a while. Nice to see you back in. And there we go. There's that termination. Now we have a full reversal. Now I have odds favorable momentum. What do you think? Pull back to support inside of favorable large triggers, anybody? Termination, full reversal, odds favorable, break the one-to-ones. Let's see if we pull back to the one-to-ones. We've got an order waiting. And off it goes to the races, guys. Reduce a little risk behind the reversal bar. We didn't take quick profits on this one. Let's just have fun. Where do you think? Where it's likely to go with the momentum? It may or may not, right? But everything we do revolves around event. Oh, and then it didn't go. There's that second lower divergence, pushed it down. Happens, but it's all about statistical advantages. And this is why I don't trade NASDAQ with new users. Getting familiar with the software. Well, Freddie, if you have any questions about it, let me know. 3 divergences in the same location can be a killer. Right into that termination again. Guys, the market's going a little sideways. Just waiting for the clear path. Waiting for the best momentum. And that's why I usually don't activate limit orders live. Because there's nothing worse than catching your 20% in front of brand new users. So if you are brand new, Ron said it, I'm going to put it up there. Day one, that's us. Day one, guys, we're taking in all the information. We're looking at trigger lines. We're looking at patterns. We're looking at entries. We're worried about termination conditions. It's a lot to take in on the first day. It really is. I know that it is. This is why we do everything kind of sequential. This is why we talk about rules in order. This is why we talk about trading with the trend. Because once you can establish the trend, once you understand whether the market is going up or down, all you have to do is look for momentum. You don't have to look for a trade. You just have to look for momentum. And if you have momentum, you're going to make sure that you're not trading into a line, one foot in front of the other. And if you're not trading into a line, then we're going to look for that pullback. This is your path, guys. This is how to learn the software, one step at a time. We're going to give you everything that you need along the way. Going to give you all the feedback you can stand along the way. We're going to look at everything that you do. We're going to talk about opportunities. We're going to talk about advantages, and we're going to keep it simple. S&P has the potential to break, but they keep pushing below. So that's a 50-50 with divergence. Let's see if Ron's theory holds water. There's his target. Ron, I'm going to help you study. The challenge is every trigger is above this area as well, right? Gee golly. The trend trade doesn't work, but everything still says up. Everything's still above support. This market is more likely to go to 1700 than it is to 1693. Just have to wait for a high probability entry. What do you guys want to talk about? In a holding pattern? There's that termination again, guys. How many times do you have to see it bounce off of a blue fib before you stop trading into a blue fib? That's the biggest question. How many times do you need to see a red fib stop it in its tracks before you stop trading into red fibs? And it revolves around minimizing your learning curve. It revolves around posting all of your trades in class. Um, Making sure that you show me your winners, making sure that you show me your losers, making sure that you show me your break evens. Every trade, win, lose, or draw, because if you win and the rules are wrong, what happens is you start practicing this long-term failure. You start practicing this idea that luck is a great trading plan. Um, you may have a short-term victory, but you may have long-term failure, and it's imperative that you know the difference. And to be sure, you just need a little feedback, and we are here to help. And if you're on that simulator, if you're participating in class, you can't lose money. That's the beauty of it. You're playing Monopoly. You can be a real estate mogul with no real risk. You need someone to tell you what you did right or wrong when you're new. That's what I'm here for, guys. 15 hours every week. This education room is open. I'm looking at your charts live. We're watching the market live. Just sitting and waiting, huh, Joel? Hardest thing to do, isn't it? But what I'm doing is we're just looking for rules to be met. We're just trying to reinforce good rules. And Joel just put in the room that he's just sitting and waiting. Guys, that's the hardest thing you'll ever do as a day trader is absolutely nothing when your rules aren't met, when that statistical advantage isn't in place. Your participation is what's going to get you to the next level. Your participation, Ron, there may be something to your theory. Doing absolutely nothing when there's nothing to do, guys. Doing absolutely nothing. If you come into wanting to be a day trader and saying, probably, Safia, I don't know where your last trade was. Will you repost it? I've hit every picture in here. Was there a question about it? Repost it. Let's look at it. You set up way, had set, huh? What does that mean? Ron, there you go, bud. Three divergences help the cause. But Ron, that exact same thing that you're talking about, divergence pushing it lower, is the exact same reason that the KISS plan that we offer every day, that super simple plan for consistency, says don't go long in that spot. Isn't it funny how that works? The rules designed to keep you safe initially may turn into a trade. Not trading into termination conditions might give you the opportunity to trade from termination conditions. And you know that it's not a long-term endeavor because every trigger line is above. Yeah, Ron, there's a reason that I say divergence on a 50-50 just isn't the best chance of success. There's a reason that that's been a rule forever. And it very much has to do with the idea that um, that it takes away the advantage. It takes away the statistical advantage. When you pass up a clear path, it's imperative that you don't give up your momentum, that you don't give up your areas inside. And Ron, you've just found a way to capitalize on it, right? You found a way that says, hey, when that 50-50, when that area has the potential to break but doesn't, and divergence prints, well, I might be able to take some of that on the way down. So here's one of those smalls are above, the large are not. You are a pirate like that. Like that about you. And this is the NASDAQ. No divergence on that one, so Ron's not going short to the reversal bar marker. Pretty good stuff. Guys, what do you want to talk about? I knocked myself completely out of my comfort zone. So I am very much sideways in my thinking because we changed up that front. There's the S&P right there. Dwight, what do you see? Do we have odds favorable momentum? Small triggers above the large triggers. Are you sure about that? Small's above the large are wide, they're angled in the direction of the trend. I feel like that's darn near my best look. But here's the second half, right? So Dwight, do we have a clear path? Are both the small and the large above that area of resistance? Has that area broken? Not yet. So the area hasn't broken yet. I don't have strong triggers here. I've already had three divergences off the fib. Do you see how decisions are made at key areas? We're kind of in a holding pattern here, Dwight. The S&P says up. The S&P has momentum, but man, when I see this sort of consolidation, look how it dances and just dissects that fib. That becomes a challenging look. So you can take a shot on the 50-50, right? But it's weak triggers, so it's not a clear path, and it's not momentum. Smalls inside, larger turning. The idea of waiting for that clear path keeps you safe. So in my plan, there's just nothing to do there yet. I'm waiting for that clear path. RTY has reached that divergence high level. None of the triggers have broken through. Once again, I just don't have a clear path. Crude oil says odds favorable and a clear path. And I also have an area inside of favorable large triggers. How do we feel about crude oil? Divergence, lower divergence, super clear path, all the momentum. And I have a window of opportunity from my lowest point of resistance to my highest point of resistance inside of favorable large triggers. That's the point where this market's most likely to bounce with those advantages of momentum, with those advantages of a clear path. I even have strong triggers. But now it's out of my hands. And one divergence on a small chart doesn't scare me. 3 divergences on the small chart. Same place I do, Gino. So Gino, take the picture, right? Guys, this is a pre-trade picture. This is how you never miss it. Type it out. Whoops. Rule 1, odds favorable momentum, yes. Rule 2, no terms, yes, right? Remind yourself that it's all good. What does Rule 3 say? Sell pullback to area inside a favorable large. Could we take this picture to Judge Judy Trading Court of Law? And this would pass the test, wouldn't it? Just waiting. And guys, they don't always give you an entry. They didn't. Those sons of guns. Sons of guns. Didn't quite make it. Missed me by a skosh. Happens sometimes. And Gino, your charts. This is that exciting where you start crunching it all up and spreading it all out. I don't know what that gray does for the brain, but it makes people feel better. If you don't want all that gray, if you don't want it super bunched up, guys, you can click the arrow. You want it, makes you feel better. I used to do that too. I don't anymore. But I used to do that. I used to always have that gray, and I don't know why. I can't explain it. Now I just keep it because I'm only worried about the most current bar anyway. My software has never not printed the next bar. It's never gone off screen on me. But same thing. Similar brains, I guess. Man, 1, 2, 3 divergences. That's enough to keep me on my hands. S&P is stuck. RTY is stuck. 90% of what you do during the day, guys, is sitting on your hands waiting for your rules to be met. 90% is sitting around waiting for advantages. When they present themselves, the study that you do is going to get you to where you can capitalize. The study that you do is going to put you in a position where you can take advantage. 3 divergences in the same price range with weak triggers tells me This market may want to push up a little bit. And this is where we don't know. Is this market going to push up to these one-to-ones? Is it going to push to this mid band? Is this market going to try to push all the way up to 84.74? Guys, I don't have any idea. All I know is that three divergences in the same price range with weak triggers might stop a trend. Is that enough to make you not try the short? That's up to you. And if the short works, is that enough to get you to start breaking rules? But now we reset. Now we're clear. We get below support. It begins to act as resistance. It's kind of weird. We just sit there and read. That's it. We're professional waiters. Being a professional waiter isn't as fun as being a race car driver, but it sure pays. Pays dividends. Guys, what would you like to talk about? There's a lot of termination conditions keeping us out of trades right now, and I don't think that's necessarily a bad thing. I think these are great lessons. Um, Someone in this room, actually not here anymore, John Novak did a live trading day on the S&P one day. He went in there for an hour and a half. He traded the S&P live in front of anybody that wanted to watch. And in an hour, he took one trade. He took one trade that fit the rules, and he got paid on it. But in 1 hour, he had one trade. Is it rolling over? When you say rolling over, Gino, everything says down. Everything says down, doesn't it? The trend is down, the triggers are down, everything says down. I don't have any indication that the market's reversing. I'm below support, it's acting as resistance. I'm coming from termination conditions. Everything indicates. No, it hit support, Gino, right here. And look at the little bounce it created. When it hit that key area, you see the little fluctuations over here? And then it just kept going through. So Gino, when we talk about termination conditions, if price pulls back to resistance and every trigger is below it, this area is more likely to stop the market and continue to the downside than it is to reverse and go up. Does that make sense? If we had hit support and the triggers didn't break and everything rolled, I would say absolutely. So a reversal looks like this. What we're seeing now is a market that has a better shot of going down than up. Is a market that's got a better chance of continuing to the downside than the upside because all your triggers are down, your trend is down, you're below all the areas. Does that make sense? One of the things that a lot of users do, Gino, is we try to predict. We try to predict what the market is going to do rather than just accepting what the market is doing. I know that I certainly had a challenge with that. At 84.30, what about it? Do you just want the market to go up? So we just reached resistance. Where are the trigger lines? They're all below, right? Price reaches resistance. All the triggers are below. I can't go long, but I'm not really looking for a short with all the divergences. This is one of those, I just have to sit on my hands. I have to wait and see. I have to wait for the market to give me an indication. That's the day low. I just want it to give me an indication. Maybe get these triggers above this area again, right? Otherwise, Some Nexgen users are looking for this reversal bar to continue with the trend. We'll see what it does. Safia, mid-band holds, everything rolls. You take the long on the pullback. Held that second one. Gino, your support was up here, right? Safia, you're holding those last contracts. That's all right. There's a lot of fibs there. So Gino, let's go through it. Here's support, right? So if we go through the idea that when price reaches support, oh, you have a blue line at 13? See, I don't have that blue line. Show me a picture of your chart. Because I'm looking at mine and I'm disagreeing with you. And if you have a fib right here, but if you do, then that would be a termination. Is it divergence but no fib? Gino, can you show me your picture? Is the line on your large chart or your small chart? Now we're getting those multiple divergences, and now we have the higher divergence. Oh, yep, Gino, you've got it to the tick. So still too soon for a reversal in this picture, Gino, but check it out. From your fib, 3 divergences, higher divergence, triggers rolling. Now we're starting to get into that. That could very well be a bottom. And I'm going to share a picture with you. The difference between might versus has. You'll like this. Anita, you were, wow, what did I do? Anita, you were curious about the S&P. Was there something in particular? Let's see what it's doing. So the S&P, it has a clear path. It's pulling back to support, but I don't have momentum, Anita. And I don't have momentum here either. So even though the triggers are above, I don't have that best look to push it up. And we're seeing that weakness do exactly what weakness does. Push things just a little bit lower. And Gino, this was probably the most helpful picture that I ever made for a lot of people. When you're trying to determine whether or not an area is going to create that top or bottom, when it's going to create that reversal. This particular one uses a range chart. You could do it on your smaller, faster chart, on your entry chart. But a lot of times price reaches that fib, right? In this case, it reaches resistance. And this is where a lot of people go, well, I have resistance, I want to go short, right? I think this is the spot where it's going to reverse. It might hold here, and I want to go short. And what happens is they get in at the fib and they get stopped out because all of the momentum is against them. The trend is against them. And then they try it again at that fib because they're convinced that they're right, but the momentum hasn't subsided, and typically they get stopped out. And then they try it again, and their large triggers are still up, and they get stopped out again. And this is that fight. This is that decision making at key areas. And if it's really going to be the top of the market, the large triggers are going to roll. The small triggers are going to roll. And a lot of the times when you get this confirmation on a small chart, it's practically the same price as where you guessed or hoped that it would work. So if we go back to crude oil, let's see what happened. You had a fib down here. But do you see how everything is still down on the large chart? And your small chart just rolled. So it's still, we're in this decision making. We're trying to figure out what's going to happen. But the large chart still says down. Do you see it, Gino? Large chart wins. And it did exactly what we expected. It broke, pulled back to, and finished the move. And this is why we let the large chart lead the way. This is why it's so imperative that you begin to develop this faith in the large chart because it's what the people that move the market want to have happen. It's the large chart tells you what the large crowd is thinking. Um, find my picture. Where'd it go? There it is. The large chart is direction. The large chart is momentum. The large chart is everything that you could ever hope for to lead the way for a trade. The small chart's just an entry chart. Um, and it's one of the reasons when I introduced that KISS plan, Gino, that that we never fight large chart strength or direction. Never fight large chart strength or direction. And if you work that into your plan, then there was no opinion long here and there was no opinion long here, right? The same way there was no opinion short right here. And now everything says down and we're pulling right back to that fib. Man, it will lie every now and then, Gino. I'm not going to say never, but I'm more inclined to sell that pullback to it to get down to the next key area when every trigger is below it, right? And obviously I did that pretty late in the move, but large chart says down, large chart's creating momentum, large chart's below the areas. Why not just trade with the large chart? It's so much easier than hoping for reversals. It really is. And I can tell you just from personal experience, I've lost a tremendous amount of money hoping for reversals before I finally figured out that I had to trust the large chart, that I had to believe wholeheartedly that the large chart really defines the opinion of the market. It really defines what they want to have happen. And then we'll just see what happens, right? And it doesn't mean that it's always right, but what it does mean is I can at least stay on the right side of things. I can at least stay. NASDAQ hit that fib. We got indecision, right? But we're not going long yet because everything still says down. I think this is a great lesson. S&P had those anything can happen triggers. Everything flattens out. We're just in the holding pattern. Weak triggers, right at a fib that didn't break. Once again, no reason to go long yet. If it's really going to be a top, everything's going to roll. And then we'll look for our opportunities to follow. So good lesson there, I think. Might versus has is a big deal. It's definitely a patience piece. And I'm going to tell you guys right now, it stinks to do nothing because you're like, oh, I just want to be in a trade. But sometimes it's more important to be in the right trade. It's more important to be in the trade that has all the advantages rather than just keeping yourself busy. So I'm going to take 5 minutes again, guys. I'm going to go walk a lap, stretch my arms, stretch my legs. If you have a question, if you have a picture, let me know. Um, and then we'll let the last hour be 100% about what you guys want to have happen. We'll leave it on crude oil. We'll see if the large chart wins again. Guys, I'll be back in 5 minutes. Last hour, let's finish strong. Gino, another great example of the large chart winning. If nothing else, today has shown us that large chart leads, large chart leads the way. What stinks is when you're trying to find opportunities in there and it doesn't. And some days it's like that, guys. Fibonacci support, absolutely no triggers through. Termination creates a full reversal. Full reversal is giving me odds favorable momentum. There's one of those areas with the potential to break because of all that momentum, but we're still waiting to see those large triggers get above it, which means that if we do get a pullback, this pullback is what we call a 50-50. 50% of my triggers are through, 50% are not, which means that we don't want to sacrifice momentum. We want to make sure that we have a very clear entry point, and we'll just see what happens. And it may just reach Fibonacci resistance before we ever get an opportunity. Same thing here. The smalls have broken through, but the large have not, which means that 42.75, 78.75, and 75, none of these are broken yet. They have the potential to break because of the momentum. So we look to the small chart. Do we have odds favorable momentum? We do. No divergence. That's a lot of areas that aren't broken. Large chart says down, but we're still looking for the clear path. Directly into one-to-ones. Absolutely no trigger lines break through, guys. Nothing to do there at all. The large chart still leads the way. The NASDAQ pulled back to support inside of favorable large triggers. Guys, I've got 4 different markets going. Clear path sure does make it easier. Clear path with odds favorable momentum makes it even easier. Clear path with odds favorable momentum and an area inside of favorable large triggers is exactly what we're looking for, guys. Each and every day we're looking for 3 advantages to come together to make a trade. We're looking at the large chart first. We're looking to make sure that that momentum is in place, that we do have the best of the best look. We're looking at the large chart to make sure that we haven't reached a line, that the trigger lines have gotten to the other side of the line, turning resistance into support or support into resistance. And then when we have it, we're just going to whittle it down and we're going to find that entry. Take care, Safia. Great trading today. We're going to take that broad stroke of a brush and we're going to whittle it down to that area where the market is most likely to continue. Guys, show me a picture, Dwight. The fib on the 5-1 from the right. What does that mean? $42.7506. What about it? It's the same one as this fib. It didn't. It's just native to the chart. That means that this is a 5-1 fib. If it extends all the way, it means that it belongs on that 5-1 chart. Does that make sense? So when we look at our charts, any fib that extends all the way to the right, that's the fib that belongs on the chart. That's the fib that is native, in this case to the 13.2, or over here to the 5-1. On your 13.2 chart, if it's a big fat fib, it's from your 21.3. And this skinny one that doesn't go, that's from your 5-1. So we actually use three different areas. And I've got my synthetics on here as well. My skinny one, that's my 13-2. That's my 21-3. And there's my native 5-1. And guys, not a clear path. And now the divergence is starting to come into play. Which means we're not only sacrificing nothing in the way, but we're also giving up momentum. Dwight, I'm not sure if there was a question there or not, but did that help a little bit? Did that answer what you were wondering? And guys, crude oil, I'm going to circle this one bar. Look at all the bars that took place inside of that one bar, guys. That's that indecision. This is why the small chart doesn't get to lead the way. It's hopped up on caffeine, right? Once again, the large chart wins, guys. The crude oil is in a giant fight to the downside right now. But do you notice how every time it stutters, it happens to be right around one of those key areas? This is why we respect them. To the tick, Fibonacci support. I feel like today is a huge lesson on termination conditions. I feel like today is a huge lesson on areas stopping the market. And it's creating challenges from taking trades, but it's creating huge advantages for staying out of potential losers, from keeping yourself from taking those trades rather than hoping that they break, really going through and saying, man, it's not broken yet. My money is worth the best of the best. My money is worth a clear path. My money is making sure all charts agree rather than hoping that a blue line breaks. Does that make sense? I hope that makes sense, guys. Today isn't about making money. Today is more about avoiding giving it away. Um, and I realize guys, this isn't the norm, right? Usually there's a lot of money to be made. Today, they're just testing our patience. They're just saying, do you respect those termination conditions? And guys, look at what they're doing. I mean, it has been fan-freaking-tastic. Next-gen users, while the rest of the world's getting stopped out on their shorts, you guys are keeping the powder dry. While the rest of the world is getting stopped out on their longs, you guys are saying, man, it's just not right. I'm not taking it yet. Um, so I think the advantages of the software go beyond just getting in. It's from keeping you in, from keeping you from taking that last trade. Guys, let's talk about what you want to talk about. I feel like I'm rambling. Um, Obviously, the market's not giving us everything that we'd want the market to give us today, but it is telling us exactly where we shouldn't be taking these chances. Derek, is there anything you'd like to talk about? Dwight, Gary, Ron? And you know what, Dan? I think that is probably one of the most profound things that you can say. I love to make money. I love to make money, but I think what happens is when we follow rules, um, I feel comfortable saying everyone in this room, when they follow rules, when they follow those advantages, is successful. It's giving it away when the rules aren't met, when you start to get bored, when you begin to form opinions. Guys, that's what's damaging to trading. You've got a methodology that wins more than it loses. You've got a methodology that focuses on advantages, that gives you everything that you need to be successful in the market. How much of it can you keep by not breaking your rules? Gino, you went short and you covered at 88. Everything breaks the area. When it pulls back and heads down, you go. 68. That's even better. I was like, man, that's not a very big trade. Sure looks bigger than that. Beautiful. Everything gets below the area. You let it pull up. On its way down, you get in. Everything says down. And you make some money. Great job, Gino. Trading with the trend. Large chart wins, doesn't it? It's easier when you say everything's going down, let's go down, instead of worrying about whether or not it might be a reversal. I really think that's true. Support breaks, resistance holds. Support breaks, resistance holds. Supports breaks. Pulled right back to that resistance. Large chart leads the way, guys. Weak triggers, divergence, everything says down. Smalls are up, large are down, above the fib. Look at the indecision. Why guess? Look at the indecision. Any Rangers fans in here? Congratulations. You guys are going to the World Series. Beat my Astros. All right, I'm going to start going through my pictures, Gino. Oh, here we go. Go get you some lobster. Oh, the Yankees, the World Series. Clearly, you guys never played baseball. Did you never try to steal the signals ever in baseball? That's part of baseball, guys. That's why coaches on the sidelines cover their mouths when they talk. Do the large triggers have to pass the one-to-ones in order to be a clear path? Absolutely, Dwight. Absolutely, they do. Ron. Absolutely. For that path to be clear, the large triggers have to get over. Great question. And man, it just goes back to the is it broken slide. Until both the small and the large get through an area, that area hasn't broken yet. And you see this a lot, guys. You'll see the smalls push through. Debbie, can you repost it for me? It'll probably be quicker than me scrolling up and searching. Yeah, because what happens, Dwight, is those one-to-ones kind of print right behind the current. They won't push ahead. The one-to-ones won't push ahead. So what you'll find is these will continue printing. They may print for the next hour and a half. Where's the S&P? See how they keep printing, but at the time, let's see where the S&P is right now. They're still going. David, let me look at Miss Debbie's and then we'll talk about it and we'll get you. So Debbie, everything says down. The momentum is down, but you are directly into a termination condition, right? Price reaches the one-to-ones, the triggers aren't strong, and you're banking on resistance holding and one-to-ones breaking. That's what I see. It doesn't matter. The patterns are the same no matter what it is. So you take the pullback, and look what happens when you reach that one-to-one. Bounce, 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 right? You take it on the third bounce at the fib, and then it goes down. You didn't take the first one, that's okay. But you had your line in the sand. You had that resistance with all the triggers below it. So you're anticipating down, but you are trading into a termination condition. So you have to be diligent, right? Your stop's in the right place. You're using the pivots. Um, Third divergence would have had me out of that one for sure. That's it's slippery slope. It's large chart wins for sure. But those one-to-ones could have been a deal breaker. So they ultimately held. You ended up break even on this one. So the one-to-ones, the termination condition did hold. Move to stop to break even. Yeah, that means that that termination condition kept pushing bounces on you, right? 21 looks good. Without a doubt, 21 looks great. But the same way the small chart, multiple divergences here can tell you that the party is over here. Yeah, because they had to make a decision at the fib, Debbie. So trading directly into areas, this market continued down here too, right? But there's a fight at the fib. There's a fight at the one-to-ones. Hey, David, good to see you in here. And I think this is the key, is trading into areas, you're trading into the places where they're making decisions, right? And that's where you get that fluctuation that can pull you out of a trade only to watch it go without you. Um, and that's kind of what got you here, I think. Like, here's our decision making, right? You're welcome. I think it's a good look. I just think you have to anticipate fluctuations. All right, David B. Confused on how to read the fib line on the large chart as opposed to the small chart. So let's go through this. Large chart defines direction, momentum, and areas, right? So David, when we're talking about termination conditions, this is where reading the fibs on the large chart comes into play. So when we're talking about termination conditions, when we're talking about reading the large chart, the fibs on the large chart, if the market reaches it and the triggers stay above or below it, it's acting as a termination condition. So you're using these large chart areas to determine where the market is likely to stop, where it may reverse, where it may bounce and create fluctuations. Does that make sense? No triggers through, just don't do anything, right? Both triggers through, it's not broken. No triggers through, sit on your hands. No triggers through, do nothing. So we're using the fibs on the large chart to determine when it's time to pump the brakes and not do anything. We're using the fibs on the small chart, large chart. David, large chart. But if your large chart has no fibs and the small does, then you don't have synthetics turned on your large chart, which means that you're kind of robbing yourself of a lot of great information. So the way your large chart is set up, David, you gonna show me a picture? So much easier, right? Take a picture and draw an arrow real quick, and let me make sure that I know exactly, that I can keep up with what you're talking about. But this is how we get where we want, right? Ask those questions. So everything is below support. It's acting as resistance. And it pulls right back to resistance, right inside of favorable large triggers. It's crazy when that happens. All right, David, let's see what we have. And that's what I'm saying is you don't have your synthetic fibs turned on. So David, on NinjaTrader 8, and really just on anything, let me show you the picture. So your large chart, David, should be set up um, with fibs from 3 different time frames. Your large chart should have fibs from your small chart, from the large chart, and from a larger time frame, from like a 21.3 if you're looking at the S&P. And this is kind of what we were talking about earlier when Dwight was talking about that one that printed from the right. On your large chart, David, any fib level that extends all the way to the right, that's native to the 13.2. That's native to your large chart. A skinny little line that doesn't continue printing to the right, that's from your 5.1. And then the fat line that doesn't continue to the right, that should be from the 21. Uh-huh. So this one prints all the way to the right. That's your 13.2 native chart, native fib. See how there's a fib here and no fib there, and there's a fib here and no fib there, and there's a fib here and no fib here. So what you've got, David, is an incomplete picture. This is your 13.2 fib. I can't tell if it extends all the way over, but it looks like it lines up with the 5.1. You can see it because of the texture on top of the fib. That's 2 areas in the same location. So going back to that, your workspaces are designed to give you those fibs from 3 time frames on the large chart, David, because we respect all of them. Um, whether it's a 5.1, whether it's a 21, whether it's a 13.2, we respect it when price hits it and doesn't break through. In your picture, you've also got that divergence low, which happens to be a termination condition as well, um, even without the advantage of pulling that fib over. But you need to right click on your large chart. And on NinjaTrader 8, there's a box that says tick data. And if you click on that box, it'll pull your synthetic fibs over from other time frames. And let me see if I can find it in the instructions. I don't have NinjaTrader 8 open just yet. Guys, can any of my NinjaTrader 8 people give me a picture where that tick data is for David? I suppose I can open up my NinjaTrader 8. But what we're looking for, David, is the ability to see 3 times frames worth of fibs on the large chart. Oh, you found it? Tick replay. Thanks, Dano. Yep, so right here under tick replay, you want that on there. And then what that'll do is that's going to get you those 3 time frames worth of fibs, and it's going to give you the complete picture on your large chart. Man, that's the first time crude has been in an uptrend for how long? It's been a while. Did anyone notice that it traded directly into resistance and a mid-band and didn't break one-to-ones and the large triggers didn't follow? And sure enough, it's pushing back down. Great safeguard to keep you from trying the long, from getting excited about going the other way. Derek, you were messaging me on my profile? Uh-oh. Haha, there it is. Oh, sorry about that. It didn't even pop up for me. Awesome. So, Derek, I just don't want you to feel like you can't jump in. This is so your class. You got long at 83.54. Not sure why it's not working. All right, Gino, let's go through the rules again. You ready? I love that you're doing this. So, what direction is the trend? Trend is up, right? So, you're looking to go long. Yep. You had odds favorable momentum. That's rule number one, Gino. That's a market that has the potential. It's likely to push in the direction of the trend. Gino, did you notice that price went smack dab into a fib? 100%. Boom, plowed into it. And that's what got you. So, Gino, termination conditions for the wind. That's rule number two. You didn't have a clear path. So, what happens is when you try this long, you're coming off of Fibonacci resistance. No, not stupido. Let's just go with new. And you're piecing it all together. But your reads are awesome, right? You're just looking to put them all together now. You identified the trend, you're great with momentum, and now you just have to start asking yourself, did price reach an area and the triggers not break? It can be, Joel. And what this does is it keeps me from trying that long. And the other thing, Gino, even if you didn't have the fib, do you see how your large triggers are so far away that there's room for a full reversal bar to form? This is what we call the gap theory, and this is a great lesson for everybody. So the gap theory, dun, dun, dun. Remember when we talked about when that mid-band can be a termination? If price accelerates super fast away and it hits that mid-band, gets to that mid-band area, and the large triggers don't follow, it's likely to snap back and close that gap. And then Gino, that's exactly what you got. Is price accelerated so fast and far away, the large triggers remained a full bar away. Notice how the smalls broke? That's a good look. But the large, they just never even followed along. They never came along for the party. We get all the way to the mid band, we smack into these one-to-ones, the large triggers don't follow, and sure enough, price closes that gap and hits those triggers. And then the flip side of that, the little more advanced side of that, Gino, is that when price isn't coming from a termination condition, middle of nowhere, it loves to hit a mid-band and finish the move down to the next area. So that gap theory gives you an indication of no more longs. And then when everything rolls, a lot of people are looking for that opportunity for short. And then there's that odds favorable momentum again, right? And here it is pulling right back, but we're waiting for the large triggers to get below. So we're sitting on our hands for a second with the divergence. Maybe we wait for a reversal bar. So Gino, you didn't have a fib there, but that gap theory, because the large weren't above, because it wasn't a clear path yet, gives you a great opportunity to sit on your hands. And I notice you're down 34 ticks. That's a lot of risk. You might want to close that position. And then if I circle the top of that, isn't it funny? Right back to resistance, right back to the mid-band, but the large triggers haven't cleared yet. So this goes back to Dwight's question. Do the large triggers have to get to the other side to consider the area broken? Sure does. The area is not broken yet. We're losing momentum. Large chart still says down. Large chart has momentum. Small chart says, let's check ourselves for a second. That area is not broken yet. We're stealing a little bit from the sellers. Maybe we wait for a reversal bar. Maybe we wait for some sort of indication that they want to continue in the direction. And then once you get that reversal bar, that was a pretty quick snap. Gino, keep posting those pictures, man. NASDAQ holds, goes all the way up to the mid band. Gino, there's your gap theory again. Closes it all the way back to the large triggers. Gives us a pivot stop out. And now they're trying to push up again, but we're trying to get above these levels. We're trying to get to a point to where we have a clear path. S&P is directly into that divergence low. None of the triggers have broken. All sorts of them there, Safia. Which termination condition do you want to point out? Do you want to talk about support and one-to-ones with no triggers through? There's one. And then we have the ones on the bottom, and this is what sets up your long, right? This is what's kind of getting you. That's okay. The trend is down, the momentum is down. So Safia, when we come up here, 1, 2, 3 divergences, absolutely, that's a good one. I love it because you're seeing both sides of it here. You're thinking longs because the terminations that push it up, right? I know how your brain thinks. Mine would be too. And then let's just look at the other side of it though. How many trigger lines got above those one-to-ones? None. So that's a termination. And if you didn't believe it, your small chart gave you 3 divergences in the same location just to say, hey, Safia, I know you really want to go long, but we love you. You're our favorite. I want to make sure you notice the one-to-ones. And if you didn't, there's those 3 divergences just to remind you. Does that make sense though? That was your big one. And then there's your gap theory as well. Did it pull back to the triggers and then launch? It went long, it went short. Oh, of course, off a termination condition, right? 3 divergences, one-to-ones never broke. Let's go to the NASDAQ real quick and just look at it. Let's look at the aftermath. So this was yours, right? There's the one-to-ones. Nothing broke. If you didn't believe it, there's 3 divergences. And then it pushes all the way back to the gap theory, which is closing the gap to the large triggers. And it comes right back to your divergence low, and none of your triggers break. Termination. And then it pushes up to a termination. Ugh. And then it pushes down to a termination. Isn't it amazing that rule number 2 just lets you know when you got to do nothing? You waited? That makes you brilliant. Nice job. And now we've got that termination condition, right? But the momentum is down. We're below resistance. Got a couple divergences. You're just kind of like, oh, let's wait. Safia, today's tough trading for everybody. I'm not going to lie. I sent my brother a message. I was like, man, we're overrunning areas today. And I don't know what's going on in the market. It's not as easy as it usually is. And if you're not very in tune with your termination conditions, and we said this earlier too, termination conditions are saving bacon today. Not trading into areas likely to stop the market is it's keeping you out of a lot, but it's keeping you out of a lot of losers. And some days I guess that's good enough, isn't it? Not giving it back when you get to keep your money Yesterday was amazing. And I think there's more amazing than not amazing. There typically is. Here, large charts winning, right? Termination, termination. Everything's leaning down. And sure enough, it goes down. S&P, everything says down, it goes down. RTY, everything says goes down. Here's that perfect picture. This is the one that John Novak gets so excited about. All the triggers below the area, pull back to the area, and let it skedaddle. Let it go. Guys, that's the one. That's such an easy trade once you learn to get it. There's that 50-50 trade with divergence. Guys, your KISS plan says don't take this trade. This higher divergence says if you do, get the hell out. And then Gino, check it out. Here's your midband on crude. There's your large triggers a full bar away. This is the gap theory. This midband may hold and price may retrace all the way back to these large triggers a full bar away. It's not guaranteed, but it's enough to keep me out of a long. Gino, does that make sense? Do you see how the large triggers are below the reversal bar marker, everybody? That's my sit on my hands moment. That's me going, oh, I'm not going long at that mid band. I'm going to wait and see if it closes the gap, especially because it's not coming from a termination condition. There you go. What's for dinner? I can't wait to get moved back into my own house so I can have all my cooking stuff again. Rice and chicken curry, delicious. And okra. Ooh, I love okra. I didn't know Floridians ate okra. Love okra. I'm excited. I think we found a house. Put my application in today. All Indian style. It's like me telling you that I'm making hot dogs today, right? And it's got the most beautiful kitchen. I can't wait to cook in that kitchen. I'm the cook in the house. I'm the domestic goddess in our house. Told my wife to go get a career. I'll cook and clean. Kitchen's no place for a woman. That's the joke in our house. My brother's an outstanding cook too. Novak men cook, and we cook well. It's a lot of fun. Guys, I know that there hasn't got a brother another. I know that it's been weird today. I know that there's been overrun. I know that there's been an awful lot where it doesn't feel easy today, and it really doesn't. Ah, black eye. You know what, Derek? I have never been able to get on board with black eyed peas. I have tried and tried and tried, and I just can't bring myself to like them. What'd you miss, Scary? What'd you miss? Where were your rules met? Show us. Crude's been a butthole today. Pardon my French. Crude has been challenging overrunning today. Not happy with crude today, but our rules have held true. And I know that, Gary, you find some cool opportunities outside of those high probability trend trades, but it's been terminations for the win today. It really has. Guys, if nothing else, you're getting the best lesson on termination conditions today. From resistance to support to mid-band to hold, resistance, all the triggers going down, to support, to termination, to termination, to termination. You thought what was the setup, Freddie? Let's go to crude. We're at right here for the short. Because we can have an awesome lesson if that's what you're talking about. Um, Freddie, if we had gotten a pullback to an area inside of favorable large triggers before the termination condition was reached, absolutely. With all that momentum and a clear path, it would have been awesome. This is one of those instances where it just didn't give us money. It didn't give us an entry, not a rules-based entry that I know of. And then it had to go and reach Fibonacci resistance, and absolutely no trigger lines broke through. And look at the reaction to that termination condition. So if you make the choice to go long right here, you are going long without a clear path. You're going long into an area that has the potential to reverse the market. Everything says up, Gino. We don't do anything. Right? Everything says up. Why do you want to go short? Give it a second. Give it a second. You don't have to be first, I promise. It might be, but Gino, let's do a chart read together. And you're right where you should be. Trend is up. I know. Momentum is up. Everything is up. So in order to think shorts, Gino, this is what I need to have happen. Is I at least need this chart to slow down. I at least need this chart to get the small triggers below the large triggers. I need this chart to get some large triggers rolling in the direction, because the reality is the market could still continue up with that much momentum. It might retest, it might create. It's a great level to not go long, but it's a horrible look to think about shorts yet. So it's a holding pattern. Let's see if we get a third divergence off of that fib. If we do, that's going to strengthen the case for potential shorts. It's only two. I look for three. If this pivot right here gives me a lower divergence, it's still too soon, but it gives me a fighting chance, right? Now it says one divergence, two divergence, three divergences potentially, no triggers through the area. I want to see these large roll. And that goes back to that one picture that we had, the might versus has. There's our fib level right now. This is what we're looking at right now. That's what we want to see to think about shorts. Does that make sense, Gino? Tomorrow morning at 9 a.m., Derek. So, Derek, I'm here Monday through Friday, 9 a.m. to noon Eastern Time. Um, and we talk about essentially the same thing in the first part of every hour. We talk about the rules for the high probability trend trade. And then we spend the rest of the day looking at your charts, looking for examples, talking about all those things that you put together to create a trade. And Derek, I'm telling you, day one is overwhelming, and I might as well be talking in Chinese, unless you speak Chinese, in which case I'd have to pick a different language. Day two, it starts to come together. Day three, it really solidifies, and then it all just clicks. Debbie, have an awesome afternoon. And I know that a lot of people on day one, they're like, well, shoot, how am I going to be a professional day trader if I don't understand it on my first day of class? Um, that's okay, but feel free to ask everything. This class really becomes amazing the more you guys participate. The more times you're like, Gino's doing it great. Where do we get short? Because it opens up a conversation for not only not trading in determinations, but also what we need to see on the smaller, faster chart to indicate that this may actually hold the market. And Gino, I'm very thankful for you today because you've kept me talking. And you've created a lot of great lessons for people. So, no, you're not. You are a perfect example of what people really want to do. So, Derek, man, use your voice every day. Um, no worries. Have a great afternoon, and I'll see you in the morning. And then, Gino, you've probably seen this one. I'm gonna show it again, though. It's just the people that are in charge. You got those sharks. If you recognize the remora from um, biology. Sharks are the big money investors, Gino. Sharks are creating momentum and direction. Sharks are reacting to areas. And our job is to be the demora, to be the remora, to really just kind of let the shark do its thing. Let it create that momentum and direction, and then we'll go in and take advantage of it. And I even put this, there's the guy that tried to be first. There's the guy that wants to go short because it's a red line. Um, And if you remember your place in the market, right? So now we have three divergences, Gino. Now we're starting to get that idea that, man, maybe this will hold. Maybe this is a good area. I'm starting to get divergences. My smalls are beginning to get below the large. Let's get those large triggers to roll, though. Let's get those large triggers, that moving average, to say, man, I just don't want to go up anymore. But you can see very much the indecision that's created at these key areas, which is why we respect them. And if I circle that one bar, this is all happening in this one bar's worth of information. Um, so that simple recipe, price reaches, no triggers, sit on your hands for a second. And you guys will notice that the large triggers never made it through these one-to-ones either. Doesn't mean that it won't go up. The momentum suggests that it will. But until we start clearing that path a little bit, there's no reason to hope for longs. And until we get that a little more slow, you know, there's not a lot of reason to fight all that momentum. Not just yet, right? Let those triggers roll. Let things slow down a little bit. That's hard to do. And I'll tell you, gosh, I hate admitting that I have weaknesses. My weakness, Gino, initially was going short right here. And then it was going short right here. And then it was me taking 7 more shorts, believing that that area should hold, rather than just waiting for it to hold, right? Taking 17 shorts down here, hoping the area breaks, rather than waiting for the area to break. Going long into resistance against that gap theory, rather than just letting everything sort itself out. So the rules are very much designed to create some patience. And check it out, Gino. Now we've got a trend change on the small chart. Now those large triggers are trying to roll. Now we're getting an indication that this area may in fact hold. And there's a trade that we teach. And guys, I think everybody should get onto this trade after you learn to read your charts. And Gino, this one will suit you tremendously. It's what we call an HVA trade. In an HVA trade, when you reach that awesome area, but it says don't go short yet, it buys you patience by letting the charts roll. And then we'll introduce an 8 range into your life. And you sell these HVA areas from the highs, or well, there it is again, termination, triggers roll, there's that high volume area. This creates a scenario, Gino, where you can get in a little bit before that first trend trade. Does anyone have a crude chart with a range chart on there? Is there an HVA setting up for that first shot? 83.53, Alan. So guys, now that in Gino, 83.53, let's see what happens if it pulls back to that area, because now the triggers are down even though the large are still up, but everything's rolling, the small are down, the momentum is there. Let's see if there's some sort of collision course that happens at 83.53, which is what we call a high volume area. This becomes your first shot at a short from a termination condition. And whoever you're working with, Gino, talk to them about the range chart. I love to teach it. I love to talk about HVA trades, But it's kind of the third trade that you'll take because it requires a level of patience. But isn't it cool? We hit the fib and we have the patience to avoid all of this indecision. And we have the ability to recognize that it's too soon or that we can't go long anymore. So sit on your hands and we'll see if it comes back to 53. We'll give it a second. We'll do one more cycle through. 1-to-1s, no triggers. What an ugly look. Weak triggers, 1, 2, 3, 4 divergences. Notice that it's pushing up higher. Weak triggers, smalls on the wrong side, no reason to take a short. And then crude oil says this top is probably good. We're just going to look for the most conservative opportunity to get back into it. And we're going to do this every day. Guys, we're going to rinse and repeat. We're going to continue to look for these advantages. We're going to continue to look for termination conditions for things that pull that advantage away. And we're going to do it every day until you guys get to where you want to be. So thank you so much for being here today. I hope you learned something. I hope that you had an aha moment or maybe just a little more clarity